Oh, Dexter, what's up? Mm. We're gonna start very shortly, Dexter. We're waiting on Uncle Steve to come in.
Hey,
What's up? Hey,
uh,
hey, Uncle Steve, what's up?
hey, Chance. I'm sorry about that mix up. Um, yeah, the rest they had some things going on today, but I still wanted to get in there
Okay.
today. I think Dana, you on? Hey, cuz Dexter.
What's up, cuz?
That's my cousin Dexter. That's my nephew Chance. That's my cousin Dexter from Fort Lauderdale. Chance.
What's up, Dex? How you doing?
I'm good.
It's like my brother. That's my brother there, Chance. He just graduated from West Virginia University, Mohead.
Okay. Mountaineer.
Let's
Yeah.
go.
Somebody on the phone. Is that Dana? Dana, you on the phone? Somebody on the phone. Pooh, is that you, Mystique? I don't know. I don't know. Somebody on the phone. I don't. I did want to ask you something before we get chatting. That I had moved some money into them. It's in unsettled funds.
Mm-hmm.
Did you look at the account? It was some money I was gonna give you, and I was gonna take some money I didn't give to you and Nail for graduating. So
Yeah,
I sold some shares, and it's in unsettled funds.
I saw that.
I don't know how I need to move that into my checking account.
You can move it right into your checking account. It's not necessarily unsettled funds. It's just it's your cash purchasing power. You got to just like give it like a few days to clear all the trades, and then
It'll move in there?
yeah.
Okay. Okay. Dana, are you on?
Yes, Papa.
Hey, they go Chad, they go Dana, they go Dexter. You see Dana, she said she didn't want nobody to see her hair, so
Well, I saw her, she turned it off, but I, I I do a lot of our city hall meetings like that. I don't show video, I just listen.
Mhm.
But Mystique supposed to. I'm gonna see if I can get Mystique on too. She said she was gonna join, but what time she get off work, Dane?
Not sure.
I'll text her. I'll text her again to see if she on. Now, I'm gonna say a quick prayer. Dear Father, we just thank you for the opportunity to come together, Lord, as family. Just come together and share some wisdom and some resources, and just thank you in leading us in all that we do. Amen. Hey, so nephew, you know I think you might be the it in the family with this stuff.
I think so.
You probably can help the next generation go to the next level and help people out. Trying to get answer some questions a little bit more.
I think
Easy.
I think it's about helping the last generation get on board with the team.
Well, yeah, that's true. That's true. And when your mom and them came by, they was telling me how much did you really like it. So that'd be good. But believe it or not, there's some of the current generation too that kind of want to do some things to help the kids get their kids, kind of set up a little bit. So that was one of the questions that I had, and I can talk freely about the account you working for me, that I had turned it into a retirement. It's a retirement. So I want to be able to transfer all that money over to like a free trading account.
Mm-hmm.
I tried to do it over the phone, and they never answered that phone at E-Trade,
Mm-hmm.
because I wanted to change. I also want to change the beneficiaries and put you a nail on there, and I can't seem to do that.
You might have to talk to maybe like a financial advisor or like a fiduciary, someone that handles money rather than like the people at E-Trade who just work the website.
Yeah. I think what I'm also, I might want to, what I'm saying is, I might have to do that, because what I want to do is liquidate that. You understand what I'm saying?
Mm-hmm.
And just turn it over, because I'm always going to have tax ramifications anytime I take something. It ain't really that much.
Mm-hmm.
You know what I'm saying? We ain't going to say how much it is, because they ain't on this joint.
Mm-hmm.
But we want to. I want to just turn that over to straight stocks. She came on.
That's right. Hair and all.
But so I'll continue to work on that. But it's just so hard to get them people. To get them over the phone. I get them. You know what I mean?
Definitely hard to get them.
Yeah. So that's what I don't know if I how I want to, if they allow me to just transfer it all over. I don't know. We can work on that. Now, one of the things, another question I had. Now, as far as E-Trade, you got Robinhood. Which one do you use?
Okay, we're gonna go through. That's in the presentation.
Okay, well, let me set up then. You go and do your.
No, that's okay. It's a part of the presentation to know what kind of trading website to use. Can you guys see that?
Yeah.
Amazing. Okay, let's start this. This is what you guys are gonna hear, guys. Welcome to the world of investing. Great way to make some money. Great way to build a future for you and your children and your whole family.
Guys, highlighting premature infant.
Next slide. Okay. So what is an investment? An investment is something that you do where you put your money basically. And you can put your money in a savings account, you can put your money in a mattress, but that's not really going to make you any money. You want to put your things in real estate. If you guys own your home, you guys want to be invested in your retirement, your 401k, your Roth IRAs, your retirement packages, your pensions. Those kind of things are investments. Today, we're going to be talking about common stock. Common stock is hedge funds, mutual funds, stockbrokers, bonds. Those kind of things are how you grow your money, how your money works for you, how you make money 24/7. So what is a stock? A stock is a unit of ownership in a company, and you receive money from that company because you gave them your money. A stock is basically just a part of the company. You're investing in them. You give them your money so that they can grow their business, they can pay their bills, and then they return the value with the value of the stocks that you own, or with dividend payments, which is a percentage of the value of the stock. So say a company has 100 stocks, you buy three of those, you buy three shares or three stocks, you own 3% of that company, and they give you 3% of the money that they have, that they are spending to give to the people who own the stocks. So some tips when you start trading stocks: try to avoid expenses and fees. That's what I'm saying with the free trading platforms and E-Trade and things like that. Open a nice account, fund it. Don't be too worried about it. Understand the taxes that go with it, because that's going to be the big part for down the road. Maybe not necessarily at the beginning, but down the road, you'll have to understand the taxes. So this is how you, it's the bigger plan, the big idea of trading stocks. You get your stocks, you find your platform, you get your ETFs, you diversify your portfolio, you talk to people, you execute trades, you build patterns, you are involved in your improving your analysis and your understanding of the market and how things work and what companies do. Then you build your wealth, and then you enjoy your wealth. I wouldn't recommend everybody waiting until they're 50 and 60 and 80 and they've waited and grown their account for 20 years and now they can spend their money. I would recommend taking some off the top and spending it, going on a nice vacation, adding an addition to your home, helping your kids go to college, helping you go back to college, you go to school and further your education, or some other good things. So you get educated, you learn more, you do things like this with your family, you have coaching videos, YouTube is an amazing stock resource. There are free trainings, books, movies, audio books, all that kind of thing. You upgrade your software, you understand more, and then you build a consistent strategy. When the goal of this is to put you on your way, you learn enough so that you can do your own thing, and then you continue to learn more and you do more, and then you have your own strategy, and then you get better and better. I would personally say that setting up an account next week on Monday, this week coming up, and then funding it and trading with it, you could understand the market just as much as Warren Buffett or Jeff Bezos. Oh, I think Mystique's coming in.
I got a question, Chance.
What is it?
What is the minimum you can start out? What sites give the minimum you can start? Oh, I'm ahead of it.
No. You're right on time. So you got your plan or whatever. Now, this is what you do before you start buying. You got to watch, you gather information. That's number one. CSNBC, the news channel, right next to CNN, Financial Times, the stock app on your phone, whether it be an Android or an iPhone, both have all kind of stock information. All tell you. And the biggest thing I would say that would help you understand stocks and what to buy and what to look for and what happened in today's market is Mad Money with Jim Cramer at 6 p.m. every day. And he'll tell you what stocks to buy, what look out for in the future, what industries are coming up. He'll talk to CEOs for you and he'll tell you what to buy. And he has had big returns. It's on CNBC. It's been running for about 15 years. I recommend all the shows on CNBC, the Squawk on the Box. They just talk about stocks all day and they'll keep you informed on what to look for and what's going on. It's something you can watch there. They have their comedian, they're a little funny. Okay, so your broker, this is where your free trading platforms, remember, you want a free trading platform. Your E-Trade, your Charles Schwab's, your Interactive Brokers, your TD Ameritrade, your Fidelity, your Robinhood, and your Webull. All of these, Robinhood and Webull are two up and coming starters, but in the SoFi, you can download these apps on your phone. They'll tell you how to create an account. They'll tell you how to fund your account, and they'll do step-by-step instructions with you. All of these. The two I recommend are, I recommend E-Trade because that's the one we're going to talk about today, and because it's the best for, it's the one that's had the longest retail investor group of for the longest time. So like individual investors, and they understand how that works, and they've set up their website to look the best for individual investors. And then if you can't do E-Trade, you can do TD Ameritrade or Robinhood. Those offer $0 investments, and you can continue to track the stocks. Just with E-Trade, you can do a little bit more, and there's a little bit more helpful information. But Robinhood and TD Ameritrade also give you helpful tips about what to do and whether or not to buy the company. And Robinhood gives you really, really helpful information on how the stock market works and what you're about to do. So, you know, in E-Trade, they would just tell you what to buy. In Robinhood, they would help you and tell you what you're about to buy before you buy. And so then once you set up your account and it's funded, I would recommend everybody start out with $100. You could start with 100 just to learn how to buy a stock and learn how the website works and explore the buying and selling options. And then, you know, move it to 200, 500, 1,000. Start funding it monthly as you get paid. Put in $100 a month as you get paid so that this continues to grow and it does automatic investments. And so once you find your stocks, you're going to be deciding whether you're going to be for growth or whether you're going to be for income. And growth is, you know, I know an individual stock, you know, a Johnson & Johnson, a McDonald's, IBM, these blue chip stocks that are just going to continue to grow and make money. And your income stocks are your dividend stocks, like your ETFs or your industry tracking funds. You'll see ETFs be the average market. ETFs are a collection of stocks. A company has created a collection of stocks.
You need to sit down for a minute. I know, and I want you to sit down for a second.
Mystique, put your phone on mute.
Okay, and so the company is a collection of stocks. ETFs are a collection of stocks that help you track the market better. So say you don't believe in one stock necessarily. You don't like Johnson & Johnson is too sketchy for you, but you still believe in healthcare. So you would get into a healthcare ETF and you would look into communications ETFs. And so this is how you would read. This right here is an example of what you would see on the ticker. You ever see those tickers scrolling by at the bottom of the screen? You ever see the ticker on a stock? This is how you would read it. You would read it as Microsoft, the ticker symbol, MSFT. If you don't see it, or if you don't know what it means, just look up, just search it up on Google. This right here, the numbers, their shares traded every day at the price that it costs. This is cost per share. To buy one share of Microsoft, it's going to cost this price, $61.25. And this arrow determines whether it's gone up or down today. And then this is how much it's changed, by how much it changed. So you can buy Microsoft right now at $61.25 because it's gone down today. It's gone down $1.35. This is a great time to buy. So that when tomorrow, when that $1.35 goes the other way, you'll make that money back. Always buy in the red. Don't ever buy. You can buy in the green, but it's better to buy in the red because then when it flips, you have made all the money that it lost. Okay, so what to do next? You create your E-Trade account, you create your Robinhood account, your SoFi account. Those are the three I recommend: E-Trade, Robinhood, or SoFi. And then you start your investment understanding. You Google everything. If you don't know something, you Google it. If you've never heard of a stock, you Google it. You listen to what people are saying. You watch Mad Money. You watch Squawk on the Street. And I'm telling you guys, you'll pick it up. It's like not hard at all. You'll pick it up very, very quickly. And you'll be like, okay, I understand. This is where I want to buy it. This is where I want to sell. I'm interested in doing this. And you guys are telling me that you want to do it for, maybe a trip later, maybe help your kids go to college later, maybe help you go to school later, save for retirement. So what you guys would be doing things in the Dow, in the S&P 500, and ETFs, sort of a collection. These are all different collections of stocks that on average do really well and grow over time. So that's what you guys want to be investing in. You guys can do individual stocks, and there's a chance you make more money. But there's also a chance, something could go wrong with that company, and then there's a chance that you would lose more of your money. So if you're just trying to grow your account and you're not caring about every little thing, and you want to, not have to worry about your money, then just Dow's, S&P 500, ETFs, and then you could check your progress just by looking at the Dow Jones on the stock market app, or like on the news. They usually have the Dow Jones on the bottom right about whether it's gone up or down that day. The next thing you got to do is you got to understand your technical versus your fundamental trading. So technical is your charts and your graphs and your volumes and your prices, that kind of stuff. This kind of stuff right here is technical. The price it's selling at, how many shares it says, how many shares it sold that day, and the amount that it's traded for. This is your technical information. Your fundamental information would be like, so did you guys hear that last week Jeff Bezos stepped down from being the Amazon CEO, and shares of Amazon tanked like 2 or 3% within like 10 minutes of that? That's your fundamental analysis. Your news updates, breaking news on CNN, something, that's your fundamental. An article comes out saying that this company is about to merge with another company, so buy now before the price goes up. That's your fundamental analysis. And your technicals would be looking at your charts and your box and whiskers. And so once you understand those things, first, does anybody have any questions so far?
Yeah, I got a question while you on there. Because we basically probably going to be looking at just like some smaller, like the Robinhood, some smaller individual accounts, not so much of the S&P group, right? Right now. But can you kind of explain what happened right quickly? Because you're doing an excellent presentation. You excellent. Teaching is in your blood anyway.
Yeah.
Can you explain the Robin Hood scenario and what happened? Because a lot of people was hearing about it, but they really don't know what happened in that situation, how some people made a lot of money and how a lot of people tanked.
Okay, I can explain that. Okay, so what happened with the Robin Hood scenario is, so there was whisperings on a social media website, that GameStop, great store, everybody knows GameStop, they're about to go bankrupt because of the pandemic and nobody's going in stores, and there's a move to online digital and all that. So big industries, big hedge funds, basically people like us, but with hundreds of millions of dollars, and they're super connected, and they're the super wealthy, the 1%. And those hedge funds with billions of dollars, they took out short positions. And so instead of buying it low and selling it high, they bought it high, and then they're going to sell it low. So just the opposite, so that you still make the money, you just make the money in reverse. You sell it before you buy it. You guys ever sign a contract where you get the job before you have the materials, and then once you have the job, then you go get the materials? This is basically what they were doing. And so their plan is to buy it high or sell it high now so that you can buy it low later. But then some other people on a smaller social media website were like, well, GameStop is doing bad now, but the new Xbox is coming out, the new PlayStation is coming out, Christmas is right around the corner. And during these times, the GameStop industry, the retail industry, does really good. And so they were like, okay, we're gonna short squeeze their position because after a certain amount of time, when you buy the stocks high and you plan on selling them low, they have to go low before a certain point before you have to buy them and sell them high too. And so they're saying we can buy shares and hold the shares long enough so that the stock price stays high. All of those people who said it was going to go lower than that are going to lose all their money. And so they bought shares and bought shares and bought shares, and they were holding. And then the PlayStation came out and GameStop was doing huge, and you couldn't get a PlayStation off the shelf. They were sold out everywhere you went. And then Christmas came around and everybody was buying used games and trading in all their stuff so that they can get more money to buy different video games and all that. So GameStop actually had a big boom in November, December in terms of revenue and customer interactions and things like that. And this is exactly opposite to what the big traders wanted. And so when it was time to come due to pay the bill for their stocks, it was supposed to be lower, they were still pretty high. So then the stock price, let's go. Can you guys see the Robinhood screen? So the stock price started going higher. You see, let's go the 3-month. So see, December is Christmas time. It's still low. It started out even lower. Look at the 1 year. It started out at $4. Everybody was like, oh no, GameStop's tanking. It's tanking. It's not a good company anymore. See, it started out decent. This was a couple years ago, but in the recent years, because of the pandemic and all of that other stuff and no new games releases, it's going down. But recently, so then the Christmas spike happened, then it started going back up. It was all the way down to $4. But then it started going back up because of the short squeeze. They were squeezing it. They were saying it's going to go down. It's going to go down. It's going to go down. They were spending millions of dollars. The hedge funds were spending millions of dollars trying to make the price go down so that they can sell it and make money. So then all the other people were like, okay, let's buy the stock and make it go up. And then we'll make all the money that they brought it at. So then it started going up. And then right here, it got on the news when it started from $20 and now it's $65. That's like a 300% increase. So then it got on the news. You heard it on MSNBC, heard it on Squawk on the Street and Mad Money, like GameStop's tripled its sales. So then it really hit the news, and then really people started buying it. So then it jumped to $350. And the people that had bought it at $16, the people had bought it at $20, the people who had bought it at $65 made 1,000% increase, 1,800% earnings returns on their investment. And so then it just, once everybody was up here and then they sold it, and then what the short funds, the margin companies did is they took a loan out, because you remember they have billions of dollars and they're very connected. So they took a loan out of another $1 billion on the shorts of it being 350, because it's guaranteed. Now they had shorts on it when it was $60, when it was $20. So now that it's $350, they're going to take out the super mega short. And so everybody that also made $60 here had bought it at $60 and $20, had made a bunch of money. So they sold, and then the hedge funds had got another double down on the shorts. So then they were preparing to sell, and then that's why it shot back down to $60. And the people who bought in at 350 thinking it was going to go to 1,000 are in the hole right now. Hopefully they haven't sold, and they're just going to ride it to the next one. But that's just how that went. And so this is why I'm saying don't worry about individual stocks. You can make some money. People have made money. People did make a lot of money doing this, but most people will not make money, and you'll be worried about this stock every single day. You're worried about this all the time. So just, go to your SPHD, your S&P 500 high dividend, low volatility ETF. that just tracks the market regularly. You see, this is how you read the Robinhood. You type in your stocks, what you think or what you heard about or what they've been telling you, and then you see its price. This is its price on Friday because they're not open on the weekend. The market, you can buy and sell stocks from 9:30 a.m. to 4 p.m. every day. And then if you get some of the more advanced accounts, you have after hours trading and you can trade from 4 to 6. But just remember, from 9:30 a.m. to 4 p.m. is the regular trading day. And so you type in the stocks you want. This is the price that you'll be buying it at. This is the change in percentage of today. And then if it's after hours, there'll be another one that shows you the after hours change. But you can see that it'll tell you that right there. And so you go your 1 day trends, your 1 week trends, your 1 month trend line, your 3 month trend line. I would stick around. If you're looking at what a stock is doing, I would stick to the 1 week, 1 month trend line. Maybe if it's been really volatile, there's been a lot of news, there's been a CEO change or something like that, maybe stick it to the 3 month or the 3 year line. So this is every chart in the 1 year line is going to look like this because of the pandemic. So this was February 2020. Before the pandemic, everything was fine. It was at 43. But then the pandemic happened and everybody sold everything and they were worried and they didn't know what was going to happen and everything was shut down. So they sold. Everybody sold a lot. They sold like 50%. But see, now this would have been a great time to buy. If you bought on March 23rd, 2020, 40% down, you have over the course of this year done absolutely nothing with your account and set on it, and you gained all of it back. You gained not all of it, but like 60% back on your way up, on your way past this February high, very close to it. So that's what I mean by ups and downs. And when you get stocks like ETFs that track the market, you'll be fine in the long run. You'll come back to where you've always been. See, they've been 5 years steady here. And then and this is one of the regular ETFs. There are some that didn't really change at all. And then they had the crash, but then they came and climbed right back to where it is. And if you bought here, you've made a bunch of money. So down here you'll have some more information on the stock. You'll have your market cap. This is how many shares are available. So they have 2.6 billion shares available. They had a high on Friday of 39. They had the 52-week high, means the highest it's been in a year. Price to earnings ratio is how much money is worth per share. How much money do you make per share? You got your low of the day, your 52-week low, your dividend yield. This is dividends. This is crazy. You look at this number to tell you this is 4.76%. So it's 4.76% of this number of the share price is how much they're going to pay you per quarter or per month, depending on what company it is. You got to see which one they do. This ETF, most ETFs are per quarter. Most stocks are per quarter. So 4 times a year. You would get 4.7% of $39. So you would get, let's do that math. 39. You do 39, the stock price, times 0.04. It's usually the average dividend yield is around 3.45%. So you would get $1.56 per share. So say I had $1,000 and I was going to invest in this company. I would come over here to the buy SPHD. I would go to dollar amount. I'd say I have $1,000 in my account. Right here it says, you'd see it says available buying power. This is how much money you would have. Right now I only have 165. All right, let's start with that. So say I only have $165 in my account. So then I want $100 of this ETF just to have in my account and sit on it. I buy $100 worth. That's 2.5 shares. I'd review order and then I'd buy. And then I click buy. See right here, Robinhood, it tells you are placing an order, a good for day market order to buy $100 worth of SPHD based on the current market price of $39.63. You will receive approximately 2.5 shares. Are you willing to place this market order when the market opens? I can't do it right now, because the market's closed on the weekend. So you got to wait until Monday, 9:30, and then you can buy it outright. So then I would click yes. Then my buying power would go down. Then I'd have 2.5 shares of SPHD. And so take my $39 times 0.0 times 0.04 gives me my $1.56 per share 4 times a year times my 2.5 shares that I have. I'll get $3.9 every quarter. So I'll get that. So I'll get about $12 a year from owning those 2 shares. And that's with $100. So now you see how, and that money will go right back into your E-Trade, right back into your Robinhood account. So you see how if this was $1,000, it would be, I would make $150 every quarter. If it was $10,000,
I got a question. So, and that money just basically is reinvested if you don't touch it.
It can be reinvested. If you don't do anything, it'll just go into your buying power right here, and then you can buy more stocks with it or cash it out. But it also, you can set up it to go and be reinvested. If you go into your account and you can go settings, it's in here somewhere, dividend reinvestment. Mine is on. So yeah, so every time I get a dividend payment, it just goes back into buying more stock, and it grows over time. So you say you could set, so you could set all this up to be automatic. You could set it to come right out of your paycheck, direct deposit into your Robinhood or your E-Trade, and it'll automatically buy specific stocks that you want, and then it'll automatically reinvest the dividends for you, so that you don't even have to check it all the time. You could check it, every quarter. You could check it 3 or 4 times a year. You could check it once a week, but I don't recommend just being blind to it. But I don't recommend in my presentation, I also don't recommend, don't micromanage. You're making it a long-term investment. You invest in buying a house, you don't watch every single nail being put into the house. You come by, you buy a lot of land and you say you want a house built there. The people go by and they build it every day, and then you check it every few days to see its progress, and you talk to the site manager to see that you're doing good. And that's how you make an investment. You're not micromanaging every single penny and waiting for it to go up and down, and you're not going to make any, and you'll be nervous if you make any money.
Let's talk, what about somebody, like me, like on the taxes? What about the tax ramifications? Say, I'm gonna take $1,000, I'm gonna start, I'm gonna set up an account and pick me some shares of companies that I want to invest in, and I'm going to be debit. I'm gonna just use this account to go in. I might get to a point I might need. If I see I'm gonna make, I make $500. You know what I'm saying? I got 1,000. I done made 1,500. So I need $500. You know what I mean?
Mm-hmm.
And that's just what that account will be for. It's not for the long term. Putting nobody through college. It's just for management purposes.
Just for income purposes and making a little money on the side.
Right.
Okay, perfect.
What are the tax ramifications on that?
That's exactly what I do. And let me tell you, there's a great stipulation in it. So if you have under $40,000 in your account, or you make under $40,000 in capital gains, you don't have to pay any taxes. Like if you have under $40,000 in your account, I wouldn't file it for any taxes, because you're not gonna have to pay any money. You're just gonna waste your own time. The guy who's doing it, when you file it with TurboTax or whatever, they're gonna be like, oh yeah, here's an extra fee for having to do your taxes. There's a bunch of paperwork that you wouldn't have to do. It's how the tax bracket works is you don't have to pay any money unless you make under $40,000. Let's see if we can find a tax bracket. Does it say? No, that's corporate taxes. I'll find a article for you guys, or not an article, but like the IRS website where it says your tax bracket. But the way it works is you have to make at least $40,000 before you start paying capital gains tax. So if your account is under $40,000, if you're just trying to take out $500 to go do something, just go ahead and take it out. It's not part of your taxes. If you have a Robinhood account set up, you'll have Robinhood Cash where you'll be directly connected to the money that you have, and you can transfer the money to and from your personal bank account and your Robinhood account. And you can set up direct deposit and do all of those things. See, I have a whole card that I can use freely whenever I want to with ATMs and with free ATMs available. And so that if it's under $40,000, don't worry about it. If it's
And okay, and other thing, and what about the fees? Are there any fees? Robinhood got to make some money. So are they putting service fees on for transactions?
there are no that's the Robinhood and Webull kind of came out with this new thing where it's commission free trading. So you can trade your regular stocks and your ETFs for free on most platforms, if not all platforms. Robinhood's free, Webull's free, SoFi's free, E-Trade's free, TD Ameritrade's free, Fidelity's free. So you don't have to pay any commission for buying regular stocks and ETFs. That's where the retail revolution came in, and it used to be like $10 to make a trade. Now it's free. You don't need any. That's why I recommend everybody learn this for themselves, and you don't need a broker. You can learn everything about the stock market and be a seasoned professional going toe to toe with Warren Buffett within a month, like for sure. Once you learn how to read a chart like this and you expand it and you can read something like this, you can read your box and whisker charts. Green bars green bars means it started on this end and it closed on this end for that period. And the whisker meaning that's its price that it went to. That's its price that it fluctuated within that time period. Red bars means it started at the top and it closed at the bottom. And that's the whiskers is how much it fluctuated during that period. Your blue line is your moving average based on what it actually is. Your yellow line is your estimated moving average. So like a logarithmic calculation of what it should be. You know, this right here is your volume. This is how many shares are being traded, whether they're green means there were mostly buys, red means they were mostly sells. Your RSI tells you whether it relative strength index tells you whether it's overbought or oversold. So right here we can see, let's go to the 3-month on GameStop to give you another example. So see, we can see huge volume right here on January 26th when it was at its highest, started down here, ran all the way up here. This next one started all the way down here, ran all the way to up here, you see, but then they started selling more. Look at the volume, mostly sells. People made all this money. Now they're selling because they want to cash out. They want the actual money. So then that's why you can see it went down. And look at the moving average went all the way up here and then came all the way down here. But the estimated moving average is down here. It went way above its moving average. Had lots of steam, and you can see right here in your relative strength index, it was very, very overbought, way too many people buying it. But if you go, let's see if we can go back to the 1 year. See how it spent lots of time being underbought, being oversold, way too many people selling it, driving the price way down. But then see, as soon as the price goes up, it starts to get way overbought. But then it always eventually comes back down to the middle, always right in the middle. And your MACD right here, this is your buyers and sellers momentum. If you see any website offering premium services, Robinhood's offering Robinhood Gold, just know that the only thing they're showing you is the MACD. But people don't really understand. They explain how to read the MACD for you, but people don't really understand. So it's harder to read, or that you don't really know what it is. So you're like, oh yeah, level 2 will show me, but you're paying for extra, but they're really just showing you the MACD chart. So the MACD chart is your buyers and sellers. It's really a combination of your volume and your relative strength, where it shows you how the momentum of all the buyers push the price up. This is where the price really goes up. When your momentum of your buyers is higher than the momentum of your sellers. And then your price goes down. You see how your price goes down when your momentum of your sellers is higher than the momentum of your buyers. And so this is where you can tell what's about to happen in terms of the price and where you're looking at to buying in the future. If you see it here, buy it. It's about to go really up. It's about to be it's probably already towards this peak, but if you see it like here and your buyer's momentum is coming down and your seller's momentum is coming up, know that it's about to go down, or that the price of the stock's about to go down, or that you should buy a short. You should buy it. You should sell it now at its height because it's about to be super cheaper and you should buy it later. That's options. So that's I don't recommend options just yet. If you guys really don't know how to like buy and sell stocks, just worry about buying and selling stocks and creating the account so you can see the information and that it's funded. You have access to money and all that's good before you get into the more technical trades. It's not hard to understand. I'm just saying, like, do all the basic stuff first. So these are some trader mistakes to avoid at all costs. Number one is buying stocks without a plan. Like, don't just go in and buy some stock because your buddy told you about it and it's the next big thing and you haven't done any research. You don't know whether you need to take this money out. You don't know whether you need this money or not. Just make sure you have a plan and that the money that you use is money. I wouldn't say necessarily that you're willing to lose, because you're not going to lose it. You don't really lose money with stocks, but money that you don't need, money that if it stays in the shares and you let it grow, your bills are still paid. Everybody still has money to eat. You still have money in your savings account to go out to dinner and buy something, an emergency fund. Don't just put your whole savings, your whole checking account, your whole paycheck into the Robinhood and then buy some shares and now you can't pay your bills and you don't have any food. Don't do that at all. Number two is don't be afraid to cut your losses. You see that you're down, you see that you're down on GameStop, you bought it at 350 and you're down here. You can hold till 325, but if you bought it here at 325, you see the people that bought it here got lucky and it bounced back and they could sell for like a 25% loss, which I'm hoping they did. Not even like a 10% loss, which I'm hoping they did. But the people that bought here, they can't sell. They have to sell for a huge loss. So I'm saying if you bought it at 325 and now it's sitting at 225, now it's sitting at 90 or 180, just go ahead and sell. Just go ahead and cut it for 50% losses. Don't let it crank down to where it's now worth 1% of what you paid for it. Just cut it at, I would say cut losses at like 50 or 60%. I don't imagine anybody's stock, if you're buying regular ETFs or, regular big name stocks like McDonald's, Disney, IBM, things like that, I wouldn't recommend, I wouldn't even expect it to go down more than 10%. I would be shocked if it went down more than 10% in a day, and it would be headline news and you would hear about it if one of these blue chip stocks went down more than 10%. And so the next thing is, don't gamble. Execute a trade. Don't just be like, I've looked all day, I haven't found anything. Okay, what's the next stock? What's the stock I'm going to buy? And then just buy that one because that's what you think. That's just what you don't care anymore. If you can't find a stock, it's okay to have purchasing power. It's okay to just have some money in the account and just let that grow. And just let that grow over time. And so, okay, don't overtrade, buy a few shares, have a few. This is basically saying diversification. Have a few shares in this industry, have a few shares in this company, have a few shares in this different industry with this person. You believe in this CEO, so you buy stocks here. You believe in this company, and don't just necessarily listen to MSNBC or the Mad Money or these people. Like, yes, listen to them, but also take from your own insight. You know, if you like a product, if you're using Gillette shaving cream every day, and all your friends are using Gillette shaving cream every day, that's a company to invest in. If you're using Febreze and Vaseline every day, you know, buy their parent company. I think it's Johnson and Johnson who makes all of these products. The parent companies are where the money is, you know. AT&T and HBO, all those are subsidiaries of Time Warner, I think. And so Time Warner is a big company to invest in because they have lots of subsidiaries with lots of things that you use every day. You know, your car, if you drive a Ford, Ford is doing good. You use Vizio. If you have a TV, Sony is a good stock. You know, you can listen to the big guys out there who tell you what to buy, and they're not necessarily wrong, but also, you know, be invested in some of the things that you use in your own house every day. And like I said earlier, don't micromanage, you know, make an investment. That's why I say buy things that you know. You know Sony, you use a Sony TV every day. You have a Sony phone. You know Apple, you have an iPhone. You use your iPad every day. You have Gillette shaving cream, you shave with these people all the time. You know they're good companies, and you'll be able to hear on the news if something happens to them, and you're not worried about some small penny stock and you got to check it every hour to make sure it doesn't drop by 50% and nobody will know about it and you lose all your money. 6 is if you make a bunch of money, you know, don't be greedy. Take some off the top. If you're up 50%, you're up 60%, 80%, 100+%, take 20, 50% off and just play with the money that you made, and so that you're secured and that you've grown your investment and you made it. So GameStop is a perfect example. Say you bought it here at 43, you bought it at 70, you bought it at 120, you bought it at 250. When it hits 347 and you're up 2,900%, you have to sell. Like, I know they say hold forever, you know, don't sell, it's going to go higher. When you're up 2,900%, when you're up 1,000%, when you're up 100, when you're up 80%, you sell on these stocks. You make the money, and then you worry about it later because you've already doubled your profit. You've already made 80%. You really can't do better than 80 or 100%. So when you've made that kind of money, you sell and you guarantee, because it's unrealized. That's what me and Uncle Steve were talking about at the beginning, is unrealized and realized, you know, settled money and unsettled money. If you haven't sold the shares yet, or it hasn't gone through yet, you haven't really made the money. So, you know, when you're up 100%, don't be like, oh yeah, I made all this money, I'm so rich now. You have to sell the shares, then make sure the cash gets settled, and then you have the money to buy it. So don't forget to take some money off the top. If you're doing this for income, you know, and you want to buy something, make sure you sell the shares so that you have the money and you can do something with it. Don't wait until the last minute to sell right before you get there. And now it takes 2 or 3 days for the trade to go through, and now you don't have any money. My number one rule is buy the rumor, sell the news. The more and more you pay attention to stocks, the more you watch Squawk on the Street, the more you read a stock market book, you'll hear the phrase, buy the rumor, sell the news. This means buy it when it's low and nobody's talking about it, or you're just hearing a whispering of the stock, and then sell it when you see it on the nightly news, or sell it when it's gone up and everybody's invested in it. GameStop is a perfect example. So right here, when it was $4 and now it's $15, $20, $30, this is the rumor. Nobody really knows what's going to happen. Everybody's making a little bit of money, but they don't know how it's going to go. This up here, 325, 250, 150, this is the news. This is what I mean by the rumor, sell the news. So it's a rumor down here that there's a rumor that there's a short squeeze going on, that everybody's buying GameStop to make the price go up, that big hedge funds are shorting it, so let's counteract their short. This is the rumor right here. When it's 350, it's a total short squeeze. Everybody knows about it. It's on the nightly news. It's on CSNBC. If you have shares of this, sell. If you have shares of a stock like this, sell. That's what I mean by don't hold it because it's going to go up some more. Sell it. So you guys know those things. Let me tell you about sectors. So remember how I was talking about ETFs, an easy way to track the market. Well, the different sectors are what the ETFs are disguised in. Your consumer, your communication services has an ETF, your consumer discretionary has an ETF, your consumer staples has an ETF, and all of these have their individual stocks like Walmart and Disney and Johnson and Johnson, your healthcare, financials, your industry, your IT, your materials, your real estate, your utilities. I would say your most stable ETFs would be your most stable companies, and your most stable ETFs would be utilities. So your Devron Energy, your Next Era Energy, your First Solar, those are your Dominion Power, whatever power company you have. I recommend buying stocks in whatever power company you have for whatever house, for whatever power bill you have. They definitely are traded. They're most likely traded on the stock exchange. And you can buy companies. So every time you pay your water bill, your electric bill, your gas bill, you're also paying the company, and then that company is giving you some of that money back in their share price. And anything they do with the company that affects you and your power bill also affects you positively in the stocks that you own. The next is your real estate. Your owner. I wouldn't necessarily invest in real estate companies now. I wouldn't invest in real estate companies ever. I would be more invested in actual real estate. So actually owning a home, actually getting a rental property that you use, a apartment building that you have a mortgage on. I would recommend real estate. Your materials, your steels. Joe Biden is the president now. He has a big infrastructure package, and I wouldn't base too many of my decisions on who the president is, but it does have a small effect, especially if the president is saying, "Oh, I want a huge infrastructure package with American companies only." Then buy some American steel, buy some American IT companies like IBM or Nvidia. They make uh, computer chips and stuff for computers. Industrials are your coals and your battery stuff, your neodymium batteries and your lithiums.
With those electric cars, that seems like that's going to be coming up. They made an announcement, the other day that GM is going to stop is ceasing making gas cars and going to electric. What is out there under that column? You seen anything about that?
I've seen a lot about that. If you're
Yeah.
thinking electric cars, that's a good idea. So say you're thinking electric cars. So let's go to let's do my number one tip. That's in here somewhere. My number one tip is investment understanding, is Google, is do research. Continue. If you don't understand something, you don't know something, come right here to Google and look it up. Let's look up best electric car stocks. And there'll be I highly recommend Investopedia and money.usa news and nasdaq.com and the Motley Fool. All these websites will let you do your research and tell you exactly what you need to know. So you do some research, your best electric vehicles. You got Tesla, NIO. It's their price, their market cap, their trading over the last 12 months. You read about your individual companies, Chinese-based company, primarily focused on development of electric vehicle products and parts. Tesla, we all heard of Tesla. Tesla's like 850 right now. And IO, if I were to give the best electric car company, I would go, if they have Churchill Capital, it's a SPAC. SPAC stands for Special Acquisition Company or something like that. Special Purpose Acquisition Company. And they buy smaller companies to bring onto their teams because they like. And Churchill Capital just bought the Lucid electric car company. And see, they've gone up. They just bought them like 2 weeks ago. And ever since then, they've been going up and up and up. And see, they started down here. If you bought here at 31 a month ago, but here at 17, see, a 1 month ago was at 17, 23, and they've slowly been climbing up. They slowly been making money. So if you had one share and you bought it at 17, that one share is now worth $39 and you basically made 100%. So say you bought $10,000 worth of shares in Churchill Capital. Now it's worth $20,000 in the course of a month. I don't recommend putting all your money in one stock. Definitely not. But I'm saying if you had that money in here, that's what it would have done. But say you have $100 in Churchill Capital. That $100 in Churchill Capital, part of a diversified portfolio, is now one of your biggest gainers, making 100% in a month. And it's now worth $200. So you just do your research on your electric. Let's look at best electric car ETFs. And you got your Yahoo, your Investopedia, your Market Watch, all very reputable resources. See a surge. Electric cars have had a surge of 127% in the last year. Cruising. The Tesla just made it onto the S&P 500. They just kicked out. Let me tell you what the market is saying. The market is leaning towards a environmentally friendly, a social justice friendly, a diversification and community building friendly, more environment. So, you know, you might hear Republicans and Donald Trump talking this and that, but they've always been irrelevant. The market, the blue chip stocks, the Disneys, the Teslas, the Amazons, the Googles, the IBMs, the what else is here? The ETFs, the iShare self-driving vehicles, these companies, the market is already moving towards diversification in the CEO office, is already moving towards sustainable energy ideas, is already moving towards less fossil fuels. They're already doing it. So it's better to just be on this side. You know, Tesla got put on the S&P 500 and they took off Exxon. So that shows you what way we're moving. Big oil and gas company, the biggest oil and gas company of all time, just got kicked off for a small startup electric car company that just is now more evaluated, has just been evaluated for more, to be worth more than Amazon or than Exxon.
That oil company that I had on my portfolio, that Devon, whatever. What you think? We probably need to move that up, but it's been doing good. I bought it.
He's been doing good. I honestly think it's fine now because I took most of the money out of it. That Uncle Steve, he had a perfect example. He had this Devon Energy right here at, he bought it at 25, or he bought it at $10, and it was sitting at when I sold it, it was sitting at like 25, but it's gone down now. But if you buy it at 10 and it's sitting at 25 and he had like 250 shares, that's what I was saying, that you got to sell some.
Close that screen. They can see my money.
Oh no. You got to close that screen or you got to sell. If you're at 100%, you got to sell so that you can take some of your profits from this.
I'm going to now, and you got excellent presentation. Now, and that was an excellent example. Now, I'm thinking about getting something I guess the best way to get it for the kids is to just buy some shares and just make them the beneficiaries. Or another thing, me and Nana was talking about. We was talking about maybe doing like a family group account thing or something like that. We could talk about that later on. You know what I'm saying? But those something, you know what I'm saying, like a couple of us can put some money in and have it managed that way. What do you think about that? You seen that as a good idea, or it's not worth the fight?
I mean, it just depends on how people are going to be with the money and how much you're going to put in, because I could see us doing a group thing where everybody puts in a few $1,000s and then we just sit on it for a long time, which would be a thing. But if you're trying to do it to like make some money or for the family and everybody's going to be in and out of the account all the time and worried about their money and their portion, it's never going to work.
Okay. All right. Bad idea. Let that one go there. That ain't gonna work.
But I do recommend everybody having their own account and having their own money in there, and they can do with what they want, and they can buy and sell as they want. I definitely highly recommend doing that. So like, even if you're not interested really in trading stocks, just having the E-Trade account or the Robinhood account as another bank account, and then having some money in there on the side just in case. And then you hear about a stock, you're watching the news and they say Johnson & Johnson's coming out with a new vaccine and their price is about to go up. You can boom, buy some the next day right there. And you don't have to worry about setting up an account. Or, you and your friends come together on this new stock and you did your research about it and you think it's going to go up in the next couple of months and you want to get in on the ground floor, then yes, I recommend you having your own account and you buying some shares.
Anybody else got any questions as we move?
There any other questions?
Okay, move on. You go ahead on, James. Thank you again.
Okay, no problem.
Oh,
yes.
I just in the managing part, like I spoke with Steve before I spoke with you about like being in thrift savings. My money is there. I choose mainly utilities. I think they have 5 funds. I took the 2 safest ones, but as far as the managing part, is this like not being able to do it on a basis? Is there something safer? I know I heard you say about utilities, and that was my thoughts with investing my money. Everybody needs utilities. If somebody asks me to invest, it's not the fastest money. It may not go up, but it's usually steady.
Mm-hmm.
If I got some money that at some point I might can move, and I don't know, if I want to get into following the stock market every day, or managing it as far as when it's time to sell. I understand about timing, and I may sit here and have money in an account and need to move it and don't move it and you get stuck. But I heard some of the tips you made about, cut your losses when you see it's going down. Just go ahead and get out.
Mm-hmm. But in something like utilities, see, over the course of a year, it did have a dip. It did have a March low during the coronavirus, but it immediately came back like within the month. And now we're back on track, back to where we were, a little bit lower, but back to where we were. And so I'm saying only cash out if you're down 60%. See, it tanked at about 35.
I'm sorry, I had to get a call. I'm sorry, I had to go for a second.
No, you're okay. You're okay. It only went down like 35% at the March low. So I would still say hold utilities. If you're saying, like, what are you trying to do? You saying you want to cash out of utilities and maybe put it into something else, or?
But it's a thrift savings. It's a federal retirement.
Okay.
So, but it's mainly in. I know it's a G fund and another fund, but they're like the lowest paying. It's the safest ones. It's not volatile like the market.
Mm-hmm.
That's where mine is at now.
You can keep those in there. That's a good option. That's a good other option. What'd you say?
You saying don't touch that?
Yeah, I'm saying you can have that too. And then on top of that, you create this account and you can do that. Now you could transfer that money from there into this account, but then you might also be acquiring some fees and some taxes for doing that. So I just recommend everybody create a E-Trade account. Everybody create a Robinhood account and fund it $50, $100 a month and buy you some nice sector ETFs, some Vanguard total stock market ETF, some SPY. You hear a lot about SPY, some QQQ. These are all ticker symbols that you can go and look up. Some shares, some power shares. This is just an average of the market. And you every month you fund it with about $50 to $100 and you let it grow. And you guys look pretty young. You could grow your money with your savings for about another 5 or 10 years. Just let it sit and then you'll cash out with 100% of the money you invested, if not more. If you hit it big on a stock, like say you heard about Upstart. I heard about Upstart from Mad Money, I think. I don't even remember where I heard it, but I heard about it like a month or two ago, not even like 3 or 4 weeks ago. And I bought it at like 55. And so over the course of this last month, they've come out with some new things, and they've had a strong market, and they had a strong earnings quarter. That's what you see. People are saying hold. Oh, some of them they'll give you the earnings, but they had a strong earnings. And so over the course of the month, it's doubled, and now it's $101. So that one share I bought a month ago at $55 is now worth $102, and I made $47, and I can sell this. I haven't made it; it's unrealized, but if I do sell it, I would have made $47. And so just like holding on to it, and this is short gains like that you can make in a month. We're talking like long term. So if you can make 100% in a month, imagine if you wait 12 months or 2 years or 5 years, you're gonna compound the interest on it, and you're going to have way more money at the end of this period. This is just creating a long-term savings account that's going to actually make money. It's don't have a savings account in a bank that's going to make 0.00001%, and then they're going to lend your money out at 30%. I'd say everybody create a stock portfolio and fund it with $50 a month and buy regular ETFs and let your money grow that way. That's going to guarantee you 4, 5, 6% every single year. And that's how you grow it. Desktop Metals is another example. I bought one share at $20 a month ago, and now it's sitting over $30. It's gone up 30% in the course of a month. And so that's really all I had to say. That's like the basics of it. You create your account, you fund some money, you watch the Dow, the S&Ps, you watch your ETFs, you find some blue chip stocks that you like, Johnson & Johnson, McDonald's. You go to the search bar, you type in McDonald's, it'll come up right there. You go to the search bar, and you type in McDonald's. Then you go here, buy, you click shares or dollars, depending on how much money you have. And you buy 2 shares, and you click order. And then you buy, and then you just hold it. That's really all of the stock market is 80% of the stock market is doing the research on what stock to buy. And then after you've done the research on what stock to buy, you buy it, and then you hold, and then that's the end of it. And then you just make your money. And then you wait long term, and then you cash out and go back to school, pay for your kids to go to school, go out to dinner with the money that you've made.
It's amazing that what you're saying is out there, but I remember the days I used to work for the phone company, and we worked at a lot of brokers where we had phone lines, and people used to go sit at the broker in the lobby, people with money, and watch their stocks on the screens in the stock office. And people don't have to do that now. You can do it right in the comfort of your house on your computer. Yeah. And that's the kind of thing that I've always been afraid of, but it's nothing to be afraid of. It's simple the way you're explaining it.
It's so simple. It's the democratization of not just voting now, but now the stock market. Now anybody can get into it, and you can do it right from your home, and there's nothing to be afraid. It's not gambling. The people that make you think it's not gambling. Gambling, it's either you win or lose. With the stock market, you can win, or you can just still own the stock. If the stock doesn't go up and you make no money, it just continues to trade at the price that it is, and you still own the shares, and you still have the money. And so it's not a win or a lose situation. It's a win or you own the shares, which is a long-term win. It's not a loss at all. And they make it seem scary. And, every time you see a stock market app, they show you this graph and this graph and this, and it looks all crazy, and you don't know where to pay attention. And it's a lot to take in when you're first trying to learn. But that's why I like Robinhood. That's why so many people like Robinhood, because it's very clean. It's not that much to look at. It tells you it's very simple. You buy and you sell, you check your stock price, you do your research, You find something you're interested in and you buy it, and then you just wait and you just let it grow. And this is where the concept money working for you comes in, and you don't have to do anything. I know you guys and most families are used to working for their money. So the concept of your money growing while you do nothing is relatively new. It doesn't make sense how it works, but there are people working. It's just, the people at the GameStop who are making the money, who then the owners of the GameStop company give you shares or give you money based on how many shares you have based on how many shares you have in your account. So your money still works. Somebody's still working for your money. It's not just nothing from nowhere. Someone's still making it, but you're just getting a percentage of their work. And that's how millionaires and billionaires make and have so much money. So say you have an account of $10,000 and it's making 5% a year. Okay, your $10,000 account is going to make you $500 a year, which is like some amount of money, but it's not really nothing. It's a couple dinners out to eat. It's a couple bills, maybe half on the rent or something like that. But say you're a super rich guy and you have $10 million in your account. Well, now that account is making you $500,000 a year. And $500,000 is like 5 times the average salary of a super educated person. So you see how someone with more money and compounding interest over time makes more money and grows the stock market and grows their account and can live off of these, can live off doing this. $500,000 is more than a lot of people make in a lifetime. And so, but that's not what we're trying. We're trying to start with small accounts, $1,000, $5,000, $10,000, make a good return over a lifetime. Over a lifetime, you could make $100,000. You can grow your account to be multi-millions of dollars. But as of now, it's going to be small accounts. You're going to make 25, 30, $50, $100 on the stock value, on dividend payments, on the percentage of revenue that you're earning every single time the stock goes up. And so you keep growing that, but you get $50 every couple of weeks. You get $100 every quarter. You get $1,000 every on this stock that skyrocketed and you sold it and then bought in on somewhere else. You made that $1,000. That'll happen every once in a while. Not even every once in a while. Every couple of like the Upstart and the Desktop Metals. I just did this before with 2 other stocks that I used to buy these stocks. And so, you keep doing these things and eventually you'll grow the account into multiple. This account started with I think like $60, like $80 over the last, and it's been over the last like I want to say like it's been a year for sure. Cause we've been in the pandemic for like a year. So I'd say like over the last year, we've grown it into $600+ At one point we had like 1,200. See, I didn't even follow my own rules. At one point I had like $1,200 and I was up like 100% on one of my stocks, and I was up 100% on a cryptocurrency, and I didn't sell it when it was here. And so I held it, and then I ended up selling it when it was like down here, because I had lost like 60% of the gains that I had made, and then it cranked back up. And so I still bought back in at a lower rate. So I'm still up right now, but I'm not as up as much as I could have been, and I didn't make as much money as I could have. So that's a hit on me. You're gonna take hits like that, you're not paying attention all the time. Something happens, you missed out on the highest gains. Your stock market went down, you didn't have a good pick. You say you saw companies' earnings are going to come out. You're like, oh, no way they did bad, blah, blah. And then it comes out, they just barely missed earnings and now their stock price is going down. And you have some shares and you lost like 10 or 20%. That's going to happen. You can cash out and buy another stock, or you can hold it and let it rebuild those gains and then sell when you break even. You're going to have hits and you're going to have misses. But the key is, it's not gambling. It's not win all, lose all. It's risk, really. It's risk nothing and grow over time. And then if nothing happens, then you still have the money, and then it grows over time. And so it's not scary. You're not going to lose all your money in 1 second. Not you can options and other stuff. And there are definitely ways, and penny stocks, and there are definitely ways to lose all of your money in a week, in a couple seconds. But if you're just having a regular account and you're trading regular blue chip stocks and you're trading regular ETFs, you're not going to lose all your money. Your money will be there. You'll have the shares. The price is going to go back up. And that's like the bedrock of, you guys understand volatility and things go up and down. The bedrock of the market is your blue chip stocks, your Dow, your S&P, your NASDAQ. That's where most of your trading is going to happen. That's where most of your shares are going to be consistent. And then your other stocks, your riskiers, like your GameStops, your AMCs, your penny stocks, your cryptocurrencies, those are that's what's adding on top of the market. And that's what's going to give you your more volatility. So we're going to more like stay in the basement. During a hurricane, you stay in the basement and you don't really go out until things are better. You don't hang out in the attic hoping that everything's going to be okay, worried about what's going to happen next. You hang out in the basement and you're cool and you'll survive and you'll grow over time, and then you can come out when things are better. So,
I really enjoyed it. It was very informative to me. I mean, even starting out, I still was kind of skeptical, but I understand a lot better. It's a small scale, a personal account.
Yes.
Yeah.
You're not going.
I enjoyed it. That was great presentation, Chance. And I had been dibbing it down. I really wasn't focusing on it a lot. I just put it out there and let it play around. But since you've been playing with it, it's been doing pretty good. I wasn't too sure about that unsettled money. So when they settle that money, then you get your money.
That's good. They'll probably do it in the next couple of days. It's probably because you did it on like a Friday, closer to the weekend. If you wait until like next week, it'll probably go through. Usually, that's why I said don't wait until the last second. If you like using this money for income, don't wait until the last second to sell, because just like that unsettled money, it could take 2 or 3 days to go through the clearinghouse and trading. That's another thing that happened with Robinhood. It's like it's not just it wasn't like just your little $800 that needed to be cleared. Robinhood and their trading house that they get their shares from, they needed to clear like billions of dollars worth of shares, and they didn't have that money. So that's why
get a loan.
Yeah, that's why you saw them cancel trading.
Yeah,
because they needed the collateral for all those shares. They needed to have the money to show those unrealized shares. That's a stipulation that the SEC and the stock exchange and clearinghouses did to stop the market from crashing a bunch. And in 2008 you saw it crash dramatically, and a bunch of companies had all that. So those are those kind of quantitative easing market barriers that they put in to allow for it to be more consistent. It's way safer than it was when you maybe have first heard about it in the early 2000s. After 2008, they realized that they kind of always had this idea, but now they put it more to action, and then that they have some really hard barriers that they can put up to try and keep the economy going forward and doing its best and on a consistent gain. And you've seen even in the pandemic with the stimulus packages and the giving the money directly to the stock market and funding state and local governments, is that the federal government and even state governments have some control over over the economy. So you thinking it's going to crash huge, or everything's going to collapse and there's going to be an apocalypse and all that kind of stuff, there are real frameworks that'll make sure your money is safe and that you will be secure, and there won't be a run on the bank, and there won't be massive sell-offs of everything, because people need to have cover their money, and they don't really have all this money. They don't have all this money right here ready to be bought and sold. And that's the point. It's purposeful, so that it'll take a couple of days to clear through. And so you got to kind of be the same way, and clear your money a couple of days prior, and then have it cash in your bank account ready to go before you want to do something, before you buy your next stock, before you come up with your new strategy, before you cash out to go buy dinner or something like that.
I just want to speak briefly on, like, I used to work for the local telephone company, and we had this stock plan, and I I was able to buy into the stock as an employee. I sold it and bought my house.
Yeah.
But part of the things you were speaking about, those people who got a lot of stock out of their retirement, they didn't diversify. They kept it in the company, and there was a big crash, and a lot of people went down with that because they didn't look
Exactly.
and follow trends, like you said. They didn't see, well, it's time to move from that and go to something else.
Exactly. You got to cash out. You know, you got your steady. I recommend employee options. If you guys get a new job, ask about their employee options, because those employee options, they come at a great price. They escalate in value over time, over your career, and then they cash out great, and they're great for your kids. If you want to give your kids something, give them your employee options. That'll be great, worth lots of money and at a good price. And yes, you gotta cash out those when it's time, you know, and you're moving on. Cash out those employee options, get the cash value for it, and then use that to diversify your portfolio in your private account and set this up. Think of this stock market account as a bank account. So just how you would put money in the bank, you would put money in the stock market. Just how, or not necessarily in the bank. You have your direct deposit, your checking account, but instead of having a bank savings account, don't have a bank savings account, have a stock market trading account where you keep all your money in, and then you really, really can't touch it. You're really, really not worried about it. So say you have your checking account, then you have your $1,000 emergency savings account in that bank. And then where you're really saving your long-term money is, don't have $40,000 in a savings account at Bank of America. You're losing money. You're wasting money. You're wasting time. Create you an E-Trade account, create you a Robinhood account, put your $40,000 in that, buy you some ETFs, buy you some Apples, some Disneys, some Amazons, some Netflix, some here. Let's look up the stocks on the Dow. They're all blue chip stocks. Those are all great stocks to have.
Look up some CBD. I was thinking about getting into some of that because I think that CBD, this marijuana thing is going to jump up, because with all these tobacco shops, I really think that the government is going to you know what I'm talking about. I think they're going to legalize it across the board eventually. And they seem like they're trading low, like $10 a share or something like that.
They are. If you guys are thinking cannabis, definitely cannabis. Tilray has jumped a bunch recently. CanTrust has jumped a bunch recently. The best stock market ETF, Uncle Steve, we had some of these for a long time, but I sold to buy some SPHD. We had some, it's called MJ. It's a medical marijuana ETF, alternative harvest ETA for medical growth. See, it's sitting at $24 right now.
Yeah.
It did jump a little bit at the beginning of the year, but the last couple of days it's been kind of lagging. But I think it's got some, let's see, this was a good channel. I think it's got some room to grow. So let's look at the last 3 months chart. So we see it's estimated, it's running up a little higher. See, it's moving up a little bit higher than its estimated moving average, and it flattened out. And then you see its moving average got way higher than its estimated moving average. And during that time, it was overbought. So that means its price, it's got room to run down. See, it's overbought. That means it's going up purely based on people buying, not really based on any fundamental stuff. And then you see
because
right now,
a lot of people, I was seeing a lot of people like Jay-Z and a couple of people start buying into it.
Yeah, I seen that.
If I'm not mistaken, I think a couple of stars, celebrities started buying it. And it's an African American family that has a farm out in Washington. I was looking at. They seem to be doing pretty good. So I will probably take another look. But you said we had some and you got out. You wasn't happy with it, or what was it?
No, I mean, see, it just did this little pullback here.
Yeah.
That I noticed, and then I also was buying the SPHD, just the long-term ETF ones that just do regular tracking of the market. Because
that's excellent. I love that SP. That's been doing very well. Yeah.
And then I was MJ is good if you're into alternative harvest, but I'm really thinking that we're at like maybe like 1 to 5% of the medical marijuana market. We're really waiting for another big company to come in and really start putting in like millions and billions of dollars worth of infrastructure into medical marijuana. And so I mean, you can get into it now, yeah, but it's going to be up and down, especially because Joe Biden's not necessarily wanting to do anything federal, and some states, Virginia just legalized marijuana. So there are some states trying to do it on a state level. And when you're doing things on a state level, it's a little bit harder to get a company that's going to run, multiple different infrastructures all over the country. So we're really waiting on maybe a federal, changing it on a federal level, and then a big like blue chip company to come in. Like imagine like not Marlboro tobacco, but like Marlboro like marijuana. And then you can do that. I'm waiting on something like that. And the SPHD is way safer while we wait on a company like that.
Sounds good.
And so,
thank you, nephew. You've been great. I don't know if anybody else have any questions.
Yeah, are there any other questions?
Pooh, you got any questions? Dana?
I better make some cold salad too. I made some cold salad and
No, I'm good.
I don't
Okay.
have questions. It was some good information though. I appreciate
Just
it.
remember your blue chips, your JP Morgans, your McDonald's, your 3Ms, your Caterpillars, your Boeings, your American Express, your Disney, your Walmarts, your Targets, your AT&T, your Verizons, your Nikes, your Microsoft, your Visas, all the companies that you use every day. When you go and create your account and you're funded, think of the companies that you use every day. It's not complicated at all. Think of the things that you use every day. You go to Walgreens every day, you go to CVS, you watch Disney with the kids, you put your Nikes on when you go to the gym, you brush your teeth with Colgate toothpaste, you use Honeywell, McCormick seasonings. McCormick's a great company. Johnson & Johnson, you use all of their products. Just remember, big blue chip companies, big blue chip stocks will make you money and you won't have to worry about it.
Walmart getting ready to blow up when they send out them stimulus checks.
Exactly. I heard that too. Walmart will be doing good when a lot of companies will be doing good when stimulus checks come out.
Absolutely.
Traveling will happen too when stimulus checks come out.
The cruise ships. Where they trade, I look at that. We'll talk offline about that, but I think that's getting ready to tick back up.
They're getting ready to come back, definitely.
Yeah. But I ain't gonna hold you, nephew. I love you much. Where Pop at? He there? He home? Or you work?
No, he went to work. He went to work today.
Okay.
He's off tomorrow.
Tell moms I say hello. I love you much.
Okay.
I love you guys. Everybody on here, I love you. We'll
Thank
talk
you.
offline later on about some other stuff. Yeah, cuz.
I appreciate the invite, man. I'm gonna be talking to you about it because I'm gonna probably try to start next month, like he said, maybe with $100.
Yeah, that sounds. Yeah. It's a good investment. Getting close to just sitting there and looking at. Sometimes you can look at it and move around a little bit. And
it's definitely something to do. If you guys, because of the pandemic, you're at home, you're bored, you're watching TV, you want something to do, you want something to think about. Go create a stock portfolio and then look up some stocks and read some news articles and make some decisions. It's something like if sports aren't really happening, it's something where you can do and feel like you're a part of something and make some money.
Sounds good.
Okay, guys.
All right.
All right. Take care.
Love y'all much.
Love
Talk
you
to you later.
Nice
Rose, I say hello, guys.
I will.
See you, Steve.